All right, guys, welcome to our next lesson, or I should say our next session over here. In the last video, I explained to you what made us take these two trades inside the community, actually these three trades. And today we're actually going to dive deeply into this trade over here, which was yesterday, Monday, the 24th of August. It was a beautiful 6-1, and we're probably just gonna end the week there on a Monday. I don't think I'm gonna trade anymore this week because why would I? I made my profits and I'm good to just enjoy life. That's how it works. As always and as usual, we begin with the daily charts. In the last video, we analyzed this whole situation over here, right? So this order block, we got a rejection first, and we actually did catch some beautiful setups, even though we didn't get the whole move. But still, because we're operating within the 1, 2, 3, 4, 5 minute time frames, we can still capitalize on even smaller moves, smaller price action moves resulting from a smaller rejection from there. But what we saw was price actually broke that level, that order block, and then retested it to the mean threshold perfectly to the pip. And we actually caught another harmonic momentum flow set up over here. I showed you how the mean threshold of the daily breaker block was perfectly in harmony with the mean threshold of this 5-minute order block, which gave us a beautiful entry. So our higher time frame, the daily, and the 5-minute time frame, the lower time frame, were completely in sync with each other. And these things are nothing random, guys. You're basically seeing the interbank price delivery algorithm in action here. This should be proof enough that the marketplace is basically prices generated and delivered and offered by an algorithm, by an AI. This should be proof enough. Okay. Let's just see what the daily charts showed us yesterday on Monday. So we saw that this liquidity void, this imbalance over here, was filled as well. And then we actually came into this daily resistance zone. So this is a daily resistance zone, and we're already at premium. So last week, because this was our order block, we considered the range. We drew it from here. So from this high over here. But because we broke this level, now we're going to just jump to the next high, which is here. So this is now our daily range, right? And I want to sell when price is at premium. So I want to sell somewhere over here. I'm not just going to entering sell positions here based on the daily chart, because then our stop loss would be just hundreds and thousands of pips. I don't want to do that. What do? We just go deeper into the lower time frames and actually see whether we can find a beautiful setup. Let's just see what happened yesterday. So, all right. So we clearly saw after this harmonic momentum flow setup that the trend in the lower time frame is bullish, right? The trend is bullish. So you could just imagine how many Fibonacci traders how many positions they've entered. They've entered longs here, and then they've entered probably longs here. And this is market manipulation, price manipulation to the finest, right? And then we just see higher highs and higher lows, which it looks pretty easy, right? It looks pretty easy. Just buy low, sell high. But the problem with that approach is it's not going to do it into eternity. It's going to trap retailers, people who have no idea what they're doing. And then it's going to give us huge moves to the downside and just basically trap all of them. We can actually see sell side liquidity, or I should say trend line liquidity, form here as well. So this is not a coincidence, right? Does it add up now? Why we would look for a sell here? So we said our daily charts we've filled this liquidity void, this imbalance, this fair value gap. We're at daily resistance, or we can see all of these different wicks. And then we're at premium as well. So if we take the daily range, we're at premium. So we're at the top optimal trade at the top 10% of that whole range. So at 0.886. That's where we are. Okay. So it makes sense to look for a sell setup once liquidity is being taken. Okay. What we don't just jump into Fibonacci trades over here, because that's what retailers do. They add and add into their positions, and then one move comes and they basically lose all of their money that they just made. Okay. So this was basically the trend line, and then what I saw over here was pretty simple. So this was the setup. Let's just go to the 2-minute time frame in order to see what happened here. So we can clearly see that we have higher highs and higher lows and order blocks form. So this is, for instance, an order block. We can see displacement from that order block, which validates this last candle as our 2-minute order block. Price taps into it, and then next displacement, right? And then price comes back into this order block, displacement. The problem now is very simple. So this order block, this actually is an order block because we took out these highs and actually broke the structure. That makes this an order block. And then this was the next order block. And then we had a new higher high, meaning a break of structure, right? And as soon as we have the break of structure over here, this is gonna call this an order block, meaning it shouldn't break it to the downside. If it does break it, then we call this a breaker block. So breaker block basically looks like this. So this is an order block. That's the order block. Another order block over here, right? So it shouldn't break it. It should respect it, right? If we actually break it, then this now becomes a breaker. So just imagine we have an order block here because we're bullish and we print higher highs and higher lows. This very last candle to the downside is our order block. So it shouldn't be validated. It shouldn't be, what is it? It should be respected. It shouldn't be violated. Once it does get violated, it now becomes a breaker block. So this is now called a breaker block. Okay. Then we have something that is called mitigation block, and I'm gonna explain it to you. Don't worry, you can understand it. Okay. So this is an order block. Then this is now our new order block if this high gets broken. But we're seeing that this high, so it's basically a failure to swing high. Price fails to break this high, which is why we don't call this order block. We call this a mitigation block. All right. This is called a mitigation block. We want to see this one being broken. We want to see it retested, and then we want to see displacement to the downside. Okay. So again, this would have been called an order block if we had this. Order block, breaker. But we did not break this previous high, which is why this whole range is called mitigation block. So this whole range is called mitigation block, and we shouldn't see price violating it. We shouldn't see price coming higher. Specifically, the very last candle within this range to the downside, that is called the mitigation block. So if you just go down to the 2-minute time frame, we can actually see whether we have more price action there. Again, we can see that this high couldn't be broken, which makes this candle over here, these two candles, those are going to be my mitigation block. So let me just consider that. So this is going to be my mitigation block. All right. And then our entry could be at the start, or it could be at the mean threshold of this mitigation block. And then at the same time, we're actually seeing an order block here in the 2-minute time frame as well. This is the order block. And then we printed a fair value gap. So even the order block shouldn't be violated. Even that shouldn't be violated. But to be honest, I shared this. The entry was 61.50. And then the stop loss, the invalidation zone, was 66.50. So 50 pips, right? And then let's just look at the next targets. The first target is obviously going to be this low over here. That's going to be my low. And then we actually had other entry opportunities as well. Just look at this 1-minute order block, 2-minute order block over here. We can see that price came back into it and then rejected. It broke the structure. So this is now going to be my new mitigation block, right? This is going to be my new mitigation block. We're seeing price coming back into it. We can put the stop loss just above this mitigation block and then boom, right? So this could have given us a second entry as well. So that was my first target. Our second target was basically just these relatively equal lows over here, right? That was my second target. It's a very clean draw on liquidity. And that is basically going to be where I'm going to close most of my positions. And this was a beautiful 5.5, 6.5 to 1 risk to reward because I closed partials here. This was an overall 5.5%, 5 to 6%. And it was a beautiful bread and butter trade that we took yesterday based on smart money, ICT, and mitigation blocks. Okay. But of course, we have several confirmations, both in the higher time frame and also in the lower time frame. And then, of course, the time of the day, like the session. So all of this move was in New York session, right? So that's a very important point to consider as well. And with that, if you caught this, I congratulate you. Happy profits. And probably, as I said, I'm not going to post any other trades this week. And even personally, I'm not going to take any trades this week because I'm in profits, 5%, 6%. And that's enough for this week. All right. Take care. Enjoy your day. Enjoy your evening. And good trading.